I could ask you a question.
Oh, you're gonna start with me?
Yeah, I'm gonna start.
Okay, all right. Let's change it up. Let's do something.
Little quick story to this, and then I'll get you the question.
Yeah, drop it on me.
I had to go to a wedding down south, and so I flew from Fresno to San Diego and had to take an Uber ride over to Carlsbad where the wedding was.
Okay.
And so the driver's talking to me, and he talks about, he has a house in San Diego. It's real small. He's house rich, but otherwise doesn't make a lot of money. And he's like, the property taxes are really expensive.
Yeah.
And he's like, he was talking about moving to Thailand. That was kind of his objective sometime down the road. And it got me thinking, like, if you had to move someplace, and we'll leave it here domestically, it has to be out of California.
Okay.
Where would you go and why?
Where would I go and why? Well, out of California.
Has to be out of California. It has to be a decent enough move to make it an interesting discussion.
Yeah, I'm gonna limit myself. I'm gonna limit myself to places I've been.
That's fair.
Because
makes sense.
Idaho seems nice. I've never been. I mean, Reno seems cool. I haven't been there in a very long time though. Tennessee's cool. I think I'm a little bit compromised here to answer this question because I just got back from Washington, D.C. yesterday.
Yep. And
I love it there.
Okay.
And it was hot. It was muggy. Although I'll tell you what, a muggy 92 is still cooler than a 110. Like you can go for a walk outside and not die.
Yeah.
I loved it. DC, great places to eat. It's like a less intense New York.
Yeah, I can see that.
Where there's still good food, there's good things to do, there's cool stuff going on. There's
hustle to it.
Yeah, there's some hustle to it, but there's you can go see a show at the Kennedy Center and eat at a nice restaurant in Georgetown or somewhere in the Northwest, which we did. It's great. It's definitely a company town. I mean, that's like half the people you meet in LA are actors or a producer or a writer or an agent. Somebody's doing something in DC. You're a lobbyist, you're working for an elected official, you're a bureaucrat, whatever. And I don't mean that pejoratively. I'm just saying
it's tied to one industry essentially.
Yeah, exactly. But it's cool. And there's stuff going on. In fact, while we were there, I was very disappointed. We were supposed to go see the semifinal of the DC City Open.
Oh.
And they have summer rainstorms, and a huge rainstorm came through. So we were supposed to see Shelton and then Tiafoe and Korda play. I mean, I was really excited. And it was like right as we were leaving to go to the venue, downpour. I mean, Ryan, monsoon.
Yeah. Stuff we don't experience here.
No. It was funny because there were umbrellas for sale like at every gift shop. And we're like, oh, this is so funny. Why would we're not going to buy an umbrella to take it home to use in 6 months? Yeah, no, you need it like every day, at least for a half hour. But it was a great trip. And so I'm going to choose DC. How about you? Where are you going?
I haven't thought about that for a while. Like we have this conversation with some friends, like every now and then. There was a point in time, probably a few years ago, I would have said Seattle. And so I'll default to that only because that was my answer. I don't really have an answer because I haven't thought about this in a while.
Yeah.
The reason being is food is good there. Food is very important. Cost of living, it's actually not too expensive, the real estate, at least when I looked a few years ago, relative to Fresno, like it's more, but it's not so egregious. I do like that they have rolling hills. And so therefore, if you're on a hill, you could actually have like a view from your house. Mm-hmm. That was actually very appealing. And I do think that if I were to move out of the state, one of the main criterias would be I don't want to have state income tax.
Okay, so
like it starts there. It really actually starts there, and then I'll compile the list of states that meet that criteria, and then go from there.
Sure. Well, so Nashville's cool, and of course, when we say a city, like when I say Washington D.C., it may not be we're talking about. They call it DMV, which is D.C. Maryland, Virginia over there, or the Seattle and its suburbs, but or Nashville and its suburbs are very, very cool. I can't say I've ever been somewhere if I haven't been outside the airport. So technically I was in Atlanta yesterday, but I wasn't really, because I never left the lounge and the gate.
Right? Probably not fair to say places you visit is like the airport.
But like I definitely need to go check out Texas, right, before I could rule it out as a place to be. But you know, we're not going anywhere. We've got our roots are pretty deep here. So until the kids go off to college, I can't imagine.
Yeah. Well, for the record, for people that don't know, like I was born and raised in Fresno. I've literally never left. So to give you an idea about actually moving, it's probably not going to happen. But you know, it's one of those conversations that sometimes comes up, and fun to think about.
Well, I was born and raised here. I just left for 10 years. And a very short stint of that decade included a little bit of time in DC, and LA and Sacramento. And, so, you know, every town's got cool stuff going on, for sure. Some more than others, for sure. Some more than Fresno, but we're trying.
Some less than Fresno too, for sure. Though
we're trying. Yeah. Well, you know, just because we missed going to the city open when we were in DC, it means Indian Wells is fully on the table for this spring. So that's something we've got going for us in California, right? Cool. The 5th open. Okay, let's dig in. Let's talk markets, because we are recording this in the middle of the first week of August, specifically on Tuesday the 6th, a little bit earlier than we usually drop these, but we kind of have to. Right? Markets are crazy. Markets be crazy. I will share one thing real quick. And because as part of my trip includes, you know, working while I'm out of town. You know, I take the laptop and we'll do a little bit of work while I'm out of town, as much as I can, so it's not as crazy when I get back. But part of what was going on when I was out of town was I was getting calls from the local news to give interviews for the news. Oh, yeah. So one of them was 2 days ago from my hotel. You'll see here, there's Ullman said. And then another one, I don't think I've got the sound on here, but you can kind of see. I actually had to give an interview on why the market crashed on Monday from the Amex Lounge in Atlanta. So we're never not working. That's definitely an impromptu interview. Totally. And willing to do it anywhere, any place. That's pretty nice that you were able to do it. Now that we've got Zoom, you can kind of do anything anywhere. But you know, some of it was the same. Well, we had talked last time about how it's nice when you leave town, because you were gone on vacation at one point in the summer, that it's nice when the markets don't unravel while you're gone. You had that luxury. Yes, I did not. But you know, a lot of it remains true of what we're doing here, right? It's yes, we've been talking about problems, and yes, we've been saying, okay, there could be some stuff coming. Monday seemed a little bit different. It was a sell-off. And we've talked about how the unemployment rate goes up gradually, then suddenly, and that there are some real cracks in the economic armor. But I mean, what was your take on, I guess, last week, and then specifically Monday? I think a large part of it felt like part of this, I think, is what's happening in Japan. Although I feel like you look on some of the media sites, and they will talk about a softening U.S. economy, which I definitely think is part of it. Sure. I do actually think it's like a lot of different things happening in a very small, 1 week window, which is, again, softening economy. Here you have Japan's market opened and closed down 12% on Monday, because they raised their interest rates. Right. You have what's happening between Iran and Israel, on the table.
and we have the elections and that's just dramatic. We've talked about how dramatic that is. There seems to be, a news story about that. What's happening with the elections every week, and something new's happening.
Yeah.
And so I think there's just a lot going on that adds to it, and not necessarily one thing, but a lot of things.
Well, it's been frothy. Right. It's been frothy because we've been going straight up and to the right basically since November 1st. And so, and we've talked about this before, like what forward multiple the S&P 500 is trading at. I know that's kind of jargon, but it's expensive. Stocks have been expensive because they've been going up. And so it doesn't take a lot. We didn't know what the crisis du jour was going to be. Was it going to be the Japanese yen carry trade? I mean, right. I don't think anybody had that on their bingo card. Stuff going on in the Middle East. And it wasn't just the stuff going on in the Middle East. I mean, there's even a pizza indicator where if pizza orders in and around the Pentagon start going up, that means they're all at the Pentagon overnight preparing for war, basically. Happen, and right. So the pizza indicator is flashing with stuff going on in the Middle East. We'll talk about some other rules that were being violated here, but stocks were expensive, were really expensive for a while, and were probably due to overheat a bit. And this is the thing I think that tipped it into that correction.
Yeah, I think you talk about too where stocks were priced in, with multiples for kind of a very perfect environment, right? Yeah. We needed things to continue in a very perfect environment for us to justify the kind of stock market returns that happened in the first half, and what maybe we wanted to continue to happen in the second half. And then you come up with these list of issues, and it shows we are quite far from perfect, and sure. Therefore the market corrects.
Yeah, and some would say, okay, well, do we have the right slide here? No, let me get our slides going here. Some would say that some might say that this is the start of something worse versus a correction. I don't know. What do you think this is the end of the bull or the beginning of the bear?
I think as far as the economy concerns, the economy still is on strong ground, and that's where everything generally starts. You have a lot of these ancillary issues. What happens with Japan and the carry trade? Yes, that may be that, and that seemed like maybe even a blip on the map, because again, Japan was down 12% yesterday, but they're up 10% today. Yeah. So it seemed like a bit of a knee-jerk reaction.
Right.
But the economy, as long as it's on stable footing, some of this other stuff could be very ancillary. And again, I think that while we are showing some cracks, it's not as if we've faltered into a very bad economy overnight.
Right. Well, and markets have corrections, and in fact, healthy markets have corrections. And so I think a lot of what we were getting at in earlier episodes of this, Ryan, was that we're saying that things weren't as great as the markets were pricing in, but they are not enough changed on the first 3 trading days of August that would like we didn't get news that suddenly things were bad where no one knew, right? Nothing snuck up on anybody. There's a little bit of mania going on, but over the long run, I mean, this is markets over the last handful of years, and you can kind of just spot COVID-19, geopolitical risk, like the since the beginning of 2019, the S&P 500 is up almost 107, more than 100%, we'll call it, since the peak of COVID-19, up 53%, and it's up 8% since its last all-time high. I mean, markets move higher, and they're up more than 70% of the time. That 30% just happened to hit yesterday.
Yeah, and it's a short period of time for now. Like really, the market peaked I guess it peaked a couple weeks ago. We've been in this little bit of a drawdown since then. It's
I
mean, to worry about yet.
No, well, here you go. So over the last 5 days, if we're just looking at the last 5 days, S&P 500 is down a little bit more than 3.5%. Nasdaq's down about the same, a little bit more. Dow's down 4.25%. The small cap's down even more than that. If you look at the last 10 days, Dow's down less, S&P 500 down more, Nasdaq's down 8.5%. Like we're kind of, here's a rolling 1 month. Nasdaq down 11%.
Do this. Add in the aggregate bond index, because that's probably worth again talking about.
Yes.
we have noticed this time around, as the market has struggled, the bonds have done what we want them to do, as opposed to April, which was bonds were going down and stocks were going down at the same time. So you had no protection.
Yep.
The bonds have gone up during the last couple of weeks. They're not the side of the portfolio that you're worried about. So that is a nice benefit that we have not had the last 3 years, 2.5, 3 years.
Right. It's like, hallelujah. Here we go. Interest rates are starting to fall. The 30-year mortgage as of today was 6 3/4. So down in the 6 range, down from 8, from 7 to 6s, and probably lower. I don't have it here ready for us to take a look at, but markets are pricing in a 50. You talked about this last time. Someone on the podcast said something about it. But markets are pricing in a 50% rate drop.
50 bips. Yeah.
I'm sorry, 50 bip rate, or 0.5% rate drop in September. So this is, we've been waiting. Everybody hold on to those bonds. Rates are going to fall down or coming down, probably because the economy is slowing, and it's coming true. I think all of us are so impatient. We wanted to, let's just get the show on the road. And it takes time. But
we talked about this too in the mid-year outlook, which was that bonds seem to have a better potential in the second half of the year.
Yep.
And LPL did say too there was going to be some struggles with the market, and at least so far early in the second half of the year, we're starting to see that kind of play out already.
Yep. Well, and the Fed didn't lower rates in the last meeting last week. But there has been a lot of talk lately about the SOM rule, which is yet another recession indicator. We've talked about lots of recession indicators, and we've talked about how as unemployment rates go up, they go up slowly, then they go up quickly. The SOM rule focuses on, I won't get too deeply into it. Basically, not the unemployment rate, but the unemployment rate trajectory.
Yes.
And if it moves up over a 3-month moving average of 0.5%, then it has a recession trigger. That's pretty reliable as you go backwards. And so you can see it was triggered in 2001 and 2003. It was triggered again in 2008. It was triggered in 2020. Not surprisingly, because we went parabolic with unemployment. Well, and it's been triggered again. And in fact, it's reliable going even further back past the year 2000. And so it was put together by a former Fed economist. She's been interviewed here just recently saying that she thinks that this isn't her own rule isn't right, that we're not in a recession right now. But this is another kind of concerning element. So I think, we wanted to pull things apart and say, at one point we're talking about the economy, and the other point we're talking about the stock market. So as of yesterday, we're talking about the stock market and reaction, and overreaction. Stock prices were high. But one of the reasons why there was some overreaction was because there was also some economic news, and we're talking economics now, which is a little bit different. Well, I don't know, Ryan, do you think, this is what they asked me on the news yesterday. Do you think we're in a recession right now?
Gosh, I'm so on the fence, because I can see where you fast forward us a few months and it's going to be like, it seems like we are, one of the things, unemployment is like just such a big one for the economy. And you kind of look at this chart, you kind of notice that it goes up for a while and it goes down for a while. You don't have this like a lot of ups and downs, and it gives you all these head fakes. We are in the trajectory right now of looking like things are headed upwards for unemployment, and likely you're going to say that's probably going to continue. That's my best guess, and I can see where we do hit a small recession. The only thing maybe that combats that is if the Fed hurries up, gets these interest rates to help stimulate things, and kind of helps us. We need some kind of help at this point, because the economy is not going to just turn the other direction, and so on a dime.
No, all these things that the Federal Reserve does is they lag, right? They don't happen immediately. They don't cut rates and then save the economy. So whether it's 0.25% or 0.5%, it's going to take months for that
for
to actually
it to have
work
an
its way.
effect.
Yeah,
Right.
exactly right. They're also tightening money supply on the other side. And if they're not doing anything about that, then that's not helpful either. I think the Somro, and this is the I'm gonna get this right. I don't have her first name. Anyway, the woman who put this rule together, the Fed economist who put this rule together, really what she was saying is not a rule. It's just like historical consistency or historical regularity is what she called it. But even if a rule would suggest you pass over, we're in a recession right now. It's a recession indicator. It doesn't do that. But I think what this tells you is that there's a problem. And so even if I don't think we're in a recession right now, to answer my own question, but I think it's a very real possibility that we're in a recession before the year is over, right? You look forward the next 3-4 months. Absolutely, this is on the table. Does that mean the stock market pukes and falls out again? Not necessarily. We just did this in 2022.
Right.
Yeah, stocks have gone up. They've been a bit euphoric, but some things are priced in already to a degree. And so does it mean the market just rolls over again like it did 2 years ago? Not necessarily. It's also, the SOM rule doesn't tell you how deep or long a recession is going to be. Just a recession is kind of on the table, right? So there's been a lot of, are we slowing growth, or are we going to are we going to slow growth but keep growing? We're going to find ourselves in a recession. My answer to that question is, what the hell is the difference? A mild recession versus minuscule growth. That's a matter of inches.
They come together. They come together.
Right. It's not black and white. It's on a spectrum here.
Right.
And so recession likely, but I think, is it going to be the end of the world? Probably not. But interesting. This is another kind of element here that created some of the pullback. But markets priced high. You get some BS crisis that kind of tips markets into a different direction. Here's the number of 5% pullbacks. We've shown this before, Ryan.
Yes, or similar versions of these 5% pullbacks, 10% pullbacks.
Yeah, so this is the 5% pullback. We average between 1 and 2 10% pullbacks a year. This is the number of 5% pullbacks per year. This is current as of today through yesterday, and we have had. On average, we have somewhere between 4 and 5% pullbacks a year in the S&P 500. The average is 4.6, but you can't have half of a 5% pullback, right?
Right.
So we've had 2 this year, and on the scale of volatility, pretty calm.
Yeah, and put things in context. The high that we were at in the S&P, a couple of weeks ago, to where we were yesterday, when yesterday was pretty bad. It was, we were at about an 8% pullback. So it's, again, we're not talking.
Oh, you're muted. You muted yourself. There you go.
It was odd because I didn't even touch my mouse.
Oh, really?
But I think sometimes, with the media kind of going with all these stories, it almost felt to some people probably bigger than what it's actually been so far.
Well, one of the best things I heard was the boy who cried recession, right? There's some people out here, and I might have shades of this myself, but been calling for a recession for a couple of years now. Yield curve inverts, all these other indicators come around. You're like, oh, this is historically meant recession. What's not included in a lot of that analysis is how much distortion COVID and its and COVID stimulus created. And so there was almost this euphoria among pessimists yesterday and maybe even last week. And finally they're right. Here it comes. I don't know.
Well, they definitely get loud when there's the negative news stories hitting, and then they can justify their opinions.
Sure. I think the real weird part over these last 8-9 months has been how calm markets have been. The fact that we've had below normal volatility. April was the only bad month until this last week.
Right. Right. We had a pretty good stretch for about 9-month period.
Yeah, since November 1st, when Powell said they were done raising rates. So, we'll see what the future holds. I imagine it's going to still be kind of lousy economic data, but followed on by the Federal Reserve cutting rates, the yield curve uninverting, and us finding ourselves in a brief recession for a little while. Not the end of the world. More importantly, though, and it's to go back to this, finally, the green line bonds are doing they are, I don't want to say they're negatively correlated perfectly, but they're finally moving in the opposite direction of stocks. And you even just look, that's 10 days. Here's the last month, steadily rising. Here's the last quarter. I guess that's a month and a week. Here's the last 3 months. I mean, you could see they're steadily moving up. And here we are over the last 3 months, the aggregate bond index up 4.5%, where everything else is up 1 or 2%.
You're right. And to clients that have a balanced portfolio, and when I say balanced, I'm saying you have some, a good portion bonds, good portion stocks.
Yep.
This can't be, you can't underscore this enough that, the bonds going up in a time like this play a very important role in just not having as large of drawdowns as what you may be hearing what the stock market's doing.
Right. And here's the last 6 months. The bonds the aggregate bond index has outperformed the Nasdaq and the Dow Jones Industrial Index by 1% or 2%.
Yeah.
Bonds have outperformed. Now, you couldn't have said that, here's back in April, everything's going down, including the bonds, down almost 2% on the year. But here, I think here we go. This is the pivot. This is the move from high interest rates to lower interest rates. That is jet fuel for bonds. And can make certain corners of the stock market, a little bit twitchy. And this is what the next handful of months is going to look like, I think. Well, I don't know. We could get deeper into why Monday happened and get into the the yen carry trade and what was going on with the rates. I don't think that serves our purposes here, getting too deep in the details, other than to say it was a bit of an anomaly in and of itself, but it was one of those catalysts that can come and tip the dominoes to get things really volatile when things are a bit stretched in terms of stock pricing and things are a little bit shaky economically. And you add in politics and geopolitics and it gets volatile. And I think, one of the things the news asked me is it going to be up or down tomorrow? I don't know. I don't even know it's going to be in the next week. I'll tell you this. I think over the next at least couple of months, especially because August and September are historically a little bit softer, I think over the next couple of months, it's going to be up and down. It's going to be volatile. We're going to have, I don't know if we're going to have more days like yesterday, but we're going to have some bad days and we'll have some good days lumped on top of that.
Yeah. I mean, I'd love to fast forward to, after the election, slightly after the elections. I think that usually November, December, historically are good times of the year for the stock market.
Yep.
You get the elections behind us and then you get some of these unknowns kind of out of the way. I think we know the market hates uncertainty and we have a lot of question marks right now with all these issues going on and news stories. As some of these start to get answered, I think, the market starts to get past it and settles down.
Yeah.
Of course, the most important one is going to be what's the economy? What's the economy doing?
Yeah. Well, I would say what's the economy doing? I think at a more personal level, specifically for clients, it is, yes, you turn on, like everybody turned on the Today Show this morning or Good Morning, whatever they watch, Fox and Friends, Good Morning America. I don't know. But the lead story this morning was what the stock market did yesterday. And for a lot of the people watching either this or that, they may have 20% of their portfolio in the stock market.
Right.
Meaning yesterday was actually decent for them versus the bloodbath that they thought they were getting. And so it's important to understand kind of what your plan is, what the mix of your recipe is. And if you need to check on that, talk to us. And we can kind of shed some light on that for you. This is probably where I say you can email us at info@forwardfg. You can subscribe to us on all the places where you can subscribe, YouTube and so on and so forth. But really, like when a lot of people look at the stock market and what it did in a day, they're looking at a sliver of what their portfolio actually is.
Correct.
And so that's an important thing to kind of consider also. Okay. If you are watching this for the first time, and it's because the market has gone haywire, well, the way we always wrap this up is what's on your mind.
So like everybody in the world, I'm, thoroughly fascinated with the Olympics.
Okay.
We try to get the family to watch. I will say the boys are kind of on and off, but Linda and I have made a pretty good effort to watch it. And I will say this, I love watching the stuff that you would not watch between now and the next Olympics.
100%.
I watch archery and I'm like, this is fun to watch. Like there's a suspense to it. It's crazy how far they're shooting these arrows. And I've watched a bit of the volleyball. The volleyball's,
we watched a lot of volleyball
me
in our house with Lily. Yeah.
It's just there's a lot of things going on. Always the storylines are always fascinating, interesting. That when they could how people got to where they got to, what they've had to do.
Yeah.
And so it's been a lot of fun. I can't obviously watch it all. I will say the time difference does make it a little bit hard because a lot of times already what happened, and so I'm watching things sometimes less emotionally attached because this already happened. You already know the results.
Yeah.
I will say too, I am thoroughly excited for 2028 as well because being in Los Angeles, I am.
Are you gonna try and go?
I'm like 99% there. I started to think a little bit about the logistics, how much it's going to cost for hotel rooms, how busy it's going to. We were in Los Angeles this last week anyway. It's busy.
Yep.
Add the Olympics to it, it's going to be mayhem. And so, there's some of the logistics start to worry me a little bit, but it's one of those once in a lifetime opportunities where if it's basically in your backyard, you gotta go.
I think you're probably right. Yeah, we were talking about that ourselves. We've watched a lot. I was watching Dancing Horses the other night.
I saw that.
Yeah,
it's the tapping of the horses.
Yeah, at this point, if we're all at home, the local news by and large is the weather and people being shot here in town. So we don't turn that on TV. The national news is depressing. So there's a lot of Olympics going on in our house because it's just kind of cool to watch and it's fun and it's family friendly kind of TV. We're watching a lot of Olympics. I will say, this will go towards what I've been up to. Flying back, right? You're watching a lot of stuff, watching movies on stuff. They've done a terrible job of showing tennis. Shame on NBC or Peacock or whatever it is. I couldn't find the gold medal match between the two heaviest hitters in tennis right now.
Because it was on Peacock, which is subscription only.
I have the subscription. It was on delay. I was like, they've done a terrible job of showing tennis. Shame on them.
Yeah.
So what I watched coming back was something on Amazon Prime called Top Class Tennis. Check it out.
Okay. Not familiar with this, but
yep, it is. So LeBron James and his buddy / agent have a production company.
Okay.
And one of the things they produce, it's called Uninterrupted. And one of the things they produce it's called Top Class Tennis. The season is on Amazon Prime. So if you're a Prime member, you get to watch it. And it's about 4 top level juniors, like top in the country, juniors. So playing like junior US Open, that kind of stuff. These kids are 14, 15, 16, 17, 18, maybe like high school. They're high school kids. It's worth checking out.
Okay.
I don't know if I would want that for our kids.
Your kids?
My kids or your kids, Ryan. Like it's
grueling.
A grueling, lonely, seemingly unhealthy existence for these kids who are phenomenal.
Lots of travel. You sometimes have to leave. A lot of times you have to leave your home, right? You're not gonna be a professional tennis player and likely live in the city that you grew up in. I went to school and played on the tennis team with Robert Kendrick, who did go professional.
Yeah.
And for a period of time, he was living in Florida, going to like an academy.
Sure. Yep.
And so, you imagine your kid, even if you're a teenager, you're away from home, away from your family and friends and doing this, well,
there's only one kid not homeschooled.
Oh, okay.
All homeschooled, John McEnroe Academy, IMG Academy, the academy is I love tennis, but this is like, I don't know if I would call this like a generous view of junior tennis. I think it's realistic. But man, I don't know. Like,
you
wouldn't want this and watch this and want this for Carter or Owen.
Yeah. I will say this, and this for people that aren't aware for tennis, all sports to get to high level, you're going to have to put in a lot of time. But like tennis is you and probably your coach on a court, and you're hitting for hours a day. Like it's just you and your coach, and it's just a lot of there's a lot of hours of repetition. And it's demanding and grueling, and it's
got to be like gymnastics.
A lot of travel too.
Yeah, it's got to be like gymnastics or swimming or golf maybe, because it's also these poor kids are head cases, because it's up to them, and in some cases their success fuels the success of their family. Right? It's just a lot of pressure for these kids. It's not like you're on a football team where you're winning and losing together. You're winning and losing alone, and just like everything, losing is more painful than winning feels good. That's true of stock market returns, right? If you lose 5% of your portfolio, you're sick. If you gain 5%, you don't look twice. And in tennis, unless you win a tournament, you lose in the tournurnament, right? And
that's the problem with tennis, is that oftentimes, if you're not one of the top players, which most people aren't, your expectation going into the tournament is, when am I going to lose?
Yep.
Realistically, right?
No, truly.
You're just not going to beat the top players, and you hope to go far as you can, but you're not going to win the tournament.
No, well, and so I know we're reaching the point where there's a lot of stuff to watch, because we're getting into the fall and football starting and lots going on. But if you have a spare few minutes, this is an interesting take on junior tennis, an interesting look inside junior tennis. It was not a great look. Yeah, cool. Check it out. Okay, we'll leave it there. We've been going a little bit more than a half hour. If you have questions, again, if you didn't hear this before, email us at info@forwardfg.com. Subscribe to the YouTube channel. We also have podcasts. If you're watching this on YouTube or the YouTube link, you can subscribe on Spotify, Apple Podcasts. Let me see if I can find this. Wherever you listen to podcasts, you can find us here. Here's a show. Let's see. Here we go. There we go. Right on Apple Podcasts, right there. There we are. So that way we can we try and crank these out a couple times a month, so that way we can get kind of real-time updates on what we see going on, because we saw the unemployment stuff going on months ago, right? Okay, we'll leave it there. Ryan, anything else?
No, I think we're good. Thanks.
Okay, until next time.